Welcome back, folks. I am Jon Najarian, and this is 3 at 3. 3 at 3 every business day. Our job is to report to you what we've seen as far as unusual option activity. Could be calls, bullish, puts, bearish. I'll have one of each at least today. And we determine that as unusual versus past trades in that particular equity or ETF, as well as some of the metrics we use, the full fire hose of Twitter, for instance, for sentiment, or the Reddit crowd and what they're saying on Reddit, inclusive of Wall Street bets. So with that all said, let's get started with today, the 20th of September, 2021. Yeah, this is one of the reasons that the market is kind of squirrely, folks. I'm sure you guys know that, but the potential default by Evergrande to test various governments, the Chinese government, of course, but then other governments around the world that might feel a little of that contagion, potentially substantial failures. So that's all you really got to do to get a party started with the bears. And that's what they did. That was early this morning. Then you had the Fed also talking about 5% inflation, something I've talked about, because the Michigan sentiment survey that I talked about last week on the halftime report Friday said that they expect 4.7% inflation. That's the public expecting that. And now you've got the Fed in many circles saying they expect 5% inflation. Well, I can tell you, folks, that'll leave a mark, 5% inflation. So the question is, and this is a difficult one to answer, for the Fed, we will know in 2 days, though, on the 22nd of September. Will the Fed stand pat because of the weak economic data that they've received lately? Or will they instead react to inflation, which is clearly running well above their expectations? But remember, it's transient, which means not permanent. It's kind of a stupid phrase, even, folks, because nothing in this life is permanent. So going with transient, yeah, or, whatever, transitory, transient, all of that kind of lines up in the same place. Anyway, let's get started. This was Lucid. Last week, we talked about the unusual option activity, October 24 strike calls. And here it is today, or that was the actual post that we put up to our subscribers. Lucid with the stock just below 23, 9,000 of those this week expiration, 24 calls. Reason I'm calling attention to it is it's one of the few stocks in the green. So I'm not going to pretend that all of the other stocks we talked about are in the green. Many of them are selling off with the market today. But here was an exception in the case of the electric car company Lucid, LCID. So I thought we'd highlight it for you and show you that volume, 47 million shares. Another reason it hit again today for unusual activity. 34 million's the average. You trade 47. Those are big numbers. All right, fresh meat. URA. One of the hot sectors right now remains uranium plays. Could be UU. It could be any of the usual CCJ trades that we've cited time and time again, rode that wave nicely. Now we've got URA hitting again today, 4,100 and over 26 calls. Please note that, again, you have an opportunity to do something with your money in this stock. If you choose to buy the November 26 calls in URA, you are not playing the way I'm playing, because I don't like buying the out-of-the-money calls. What I like doing, folks, is buying at the money and selling out of the money. As long as you maintain that one-to-one relationship, you are not putting additional money at risk. Now, this stock is down 7% today, which is why I think you're seeing people willing to take a shot on riding this out, saying that, you know what, I don't want to catch the falling knife in the stock, but I might like to take a shot on some cheap options that just got cheaper. So if you chose to, you could follow them into those NOV 26s. If you instead decided you were somebody, and by the way, those were being traded for $2.20. If you instead decided, like me, that you'd rather buy the 23 calls, the at the money, or even the 24s, 23s are what I bought for $3.10. I sold those upside 26 calls for $2.15, I think. So you get the idea that basically I'm putting on a spread for 95 cents that could go to $3. Why? Differential between the strikes. 23 I own, I have the right to take it. 26, I've given somebody else the right to take it from me at 26. Am I rooting against them taking it from me at 26? Hell no. I'm rooting for that, because then I'd cash out. Spread turns to $3. Basically, in rough terms, I turned $1 into $3. That's magic, isn't it, folks? So anyway, and I like picking up a hot uranium play down 7% on the day. And again, I am not chasing the stock. And in fact, I'm putting less money on the table than the people that bought those 26 calls. Because keep in mind, they were buying those 26 calls for over $2, $2.20 and so forth. So I'm putting less than half of that on the table. And if we get any upside move, I make a lot of money. So that's the way I like to play. Let's get to trade number 2 right after we take this quick look at the stock. There's the chart. Been up as high as 28 bucks in the middle of September, folks, which is only a few days ago, almost 29. And now at 23.68, yeah, I'm kind of interested. HSBC, here's a put trade. It says bullish, should say bearish. My mistake. Bearish puts, HSBC, stock was 24.56. So what is HSBC? Fintech, and of course, a big global bank. They have arms in both. So if indeed we think that the moves like we're seeing today might cause various jurisdictions to keep rates lower for longer, that is not good for banks in general. It doesn't kill them. It just means they make less money on that spread between deposits and lending out money. So 5,500 October 24 puts. So just out of the money puts being purchased here. There's the stock bleeding off from a June high or a late May high of about 33 down here now to 24 and just tumbling. As you see, the 52-week range extends all the way down to 1795. Do we keep going and push that? We shall see. Right now, we're trading near the lows of the day, and I'm in a put spread. Again, 1-to-1, long one put at the 25 strike, short other puts lower than that, because it's just like a call spread, except flip it upside down. It's just like a call spread in reverse. Now let's get to the third of our 3 at 3, which is Affirm. You know what they do. Buy now, pay later. And a lot of companies are into this model now. And it doesn't mess up your credit score, because sometimes taking on more credit can mess up your credit score. Doing a buy now, pay later, according to Experian and so forth, does not screw up your credit score. So a lot of people that see something they want to buy, whether it's big screen TV, computer, whatever, are doing the buy now, pay later. Affirm is in that game. You know it, that they just did that deal with Amazon about 2 weeks ago, and the stock made a big move because of it. Well, now after a little bit of softening, stock at 106.27, they're looking at October 110 calls, and they're buying 8,000 of those in Affirms. That's AFRM, which right now is trading for 106.53, virtual same price. Look at that drop, 8% drop. We peaked up at 146.90. We've now traded back down to 106 and 53 cents. I kind of like the opportunity here. So what could you do? Well, again, what did they do? They were buying October 110 calls, approximately $3.50 out of the money. So what could you do? Well, let's see. The regular October, that's October 15th, by the way, expiration 110 calls are trading for let's call it $8. 780 offered at 810. So let's call it $8. You'd probably get filled if you threw in a bid there. I don't want to spend that much money. So what I would do, folks, this is what I would do, not telling you how to do it yourself, is I like the idea of buying the 100 calls and perhaps the 105 calls and selling upside calls. Now, I don't want to get a 2-to-1. I want to get, I do want to get a 2-to-1 risk versus reward. I don't want 1-to-1. Now, right now, it's very close to a 1-to-1. I'm paying $2 for something that could go to 5. So instead, what I may do, because I haven't done this one yet, is I may sell put spreads. Now, what happens when you sell put spread? Well, you obligate yourself to buy it at the strike that you're short. So for instance, I could get in here and say, you know what? I like the idea of selling these 100 puts. They're $6.50 below the market. So if I got in there and sold those 100 puts and collected, say, $6.70, I'd be good for $6.70 lower than 106, right? Because lower than 100, I'm sorry, because I'd be taking on the responsibility of buying the stock at 100, no matter how low it goes. But I'd be getting paid $6.70 to do that. So one of the things I might do is sell those puts and buy a lower strike put against it. That way, if the stock fell out of bed and they decide, you know what, it's illegal to do, and that's not even being talked about, but it's illegal to do a buy now, pay later business, and they basically put up a big impediment to it, well, stock could lose 50% of its value like that. Do you want to be on the side of the trade that you're naked short those 100 puts in that case, even though you're putting on an obligation to buy it $12 lower than where it is right now? Maybe you want to sell those 100 puts and buy the 95 or the 90 puts. You get to keep all of the money that you take in net credit as long as it stays above 100. So that's a couple different ways to play it, folks. Bang. Crypto trading conference. Yes, we'll be talking about trading crypto, how we trade it using options, of course. Also, we've got a fabulous lineup. I've got one of the founding team from Hedera. HBAR is that symbol. We've got him. His name's Jordan Freed coming. Brilliant young guy. And not surprising, a lot of the folks in crypto are brilliant young guys and gals. But trading conference is at the ARIA October 1st and 2nd. That's October 1st and 2nd. That's only 2 weeks away, folks. Reserve now. Go to marketrebellion.com/events. That's marketrebellion.com/events. If we have any bronze tickets, you can grab them. If we don't, you can grab a virtual ticket. You don't have to pay for airfare, don't have to pay for a hotel, and you still get every single breakout session at the conference for that virtual ticket. You also get it, by the way, if we have any bronze tickets left, but I don't know if we do. Go check it out, marketrebellion.com/events. I hope we see you there. Questions? Shoot them into me at Jon Najarian at Twitter. That's at Jon without an H, Najarian and I will try to answer those questions. Scott Van Eck sends me something about the 50% rule. And he says, and his handle, by the way, is at SAVEME1, Save Me One. John, with your hard and fast rule of selling when you're 50% down on a bull call spread, is the 50% on the buying leg or the overall percent when you factor the contracts you are selling as part of the spread? It's on the entire spread. So for instance, Scott, if I paid $1 for that spread, example, what if I bought one option for $7 and sold another option for $6? I've net only paid $1. So I, in that case, would be looking at that. If the spread falls to 50% of the $1, in other words, 50 cents, I would exit. That's the way I do it. You can elect to apply any discipline that you want. Of course, it's your money. But I have found that over time, if I cut these losses at 50%, some of them do actually come back. I just look the other way. On the other hand, some of them go to zero. And for those, I am very grateful that I have cut the loss so I don't ride that trade into the ground. Thank you for that question, Scott. I'm sure a lot of people have that question as well. Now we have a guy that needs help, and he's a Series 7 tutor. And that's his handle too, at Series 7 TUTOR1. John, we know you're political, and I think he means you are, like YOU''RE, you are. But let's take it at face value. I know you're political, but maybe you have some real valuable insights you can share on the markets while it's down 800 points. Yes, I do. Like how we can all better position our portfolios or trade for a profit. Let me show you a couple things here, Series 7 tutor. Number one, we had a big VIX tell end of August. What was that big VIX tell? There you see it on the screen. I've talked about it on halftime, talked about it with our clients. 90,000 of the regular November expiration 20 calls bought in the VIX. So to give you an idea, the VIX was the November VIX, because these trade on the futures for those expirations. This November VIX was, and I'm VIX, they were trading for 1763. That was the VIX back on that date, August 26th, 2021. Where is the VIX now? Well, it's 25, give or take. The actual underlying VIX is 2585. So it's moved up rather substantially, wouldn't you say? Yeah, that's a tell. How much is that? 60%. That's what it looks like. In 3 days, it has moved up from September 16th, where it was 1765, to a high today of 28. Now, this is the spot VIX, but nonetheless, it's very good to take a look and see exactly how the spot VIX is trading, as well as the futures. The options are on the futures, not on the spot. So when I'm looking at a 1765 and a move up to 28.25 on the spot, that's a 60% jump. So what does that mean? That means we've got fear, a lot of it, and we're breaking high on the VIX, which means the fear index is whoop, 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 whoop to the upside. I like that. That sets us up for a nice purchase potentially. What do I do usually, Series 7 tutor? Usually, and I am looking to do it today, late, or tomorrow into the Fed meeting on Wednesday, the 22nd. What am I looking to do? Well, when VIX goes high, I want to buy stocks and sell pumped up premiums in the calls. That's what I do. When it comes back down, as it just had days before that, I flip out of that trade. I sell out those stocks that I've purchased. And because the VIX has come down, I'm buying back those calls that I sold against my purchase of those stocks. So that's what I like to do. And I've done that in spades. So my advice to you is on 800-point down days in the market, be patient, wait for it, in particular, as these margin clerks bring in the sales at the end of the day. Frequently, we see spikes in the VIX occur because of that. So for instance, right now, let me see where our VIX is. Oops. VIX. Just shy of 28 right now on the spot VIX. So we've already put in a high for the day so far. Will that be the high for the day? The high that we hit, which was 28.43? Maybe. I like accumulating stocks and or the S&P at that level and selling upside calls against stocks and or the S&P at that level. So that's the way I'm playing it, Series 7 tutor. Thank you for the question. All right, folks. If you have more questions, go to marketrebellion.com/get started. Hopefully we can answer your questions there. That's marketrebellion.com/get started. Again, if you want those last remaining tickets for the October 1st and 2nd event at Aria in Las Vegas, go to marketrebellion.com, and instead of typing get started, type events. That's marketrebellion.com/events for that conference information. Thank you, folks. Have a great day. I'll see you tomorrow, right back here on Market Rebellion Television.